The Income Tax Act 2025. Today is day 43, and today I'm continuing with the same. And today I'm starting with a new chapter of deductions. So, in this act, the new act, an Assessee can get deduction under Chapter 8. There are various kinds of deductions which are kind of broadly classified as either general or payment based or income based, or for disabled people, there are many deductions. Let's start with section 132. This is a general section about deductions. It says that deduction under chapter 8 is restricted to the GTI and it cannot be carried forward. Means when the deduction that we are eligible for is more than our GTI, it does not mean we will carry forward the excess income. That deduction will just lapse. Then there is when any deduction is allowed to AOPBOI, no deduction is allowed to the member of AOPBOI. This is the case where the AOP was paying taxes on slab rates, and then share from AOP was getting added in the income of the member, and he was again getting taxed. Then it says about that case only that when a deduction is allowed to AOP, then it will not be allowed to the member. The next section is section 123. This is the main section of deductions. It is earlier it was section 80C. Now it is called section 123 in the new act. It's read with schedule XV. So it talks about specified investments. First of all, who are eligible SSCs under this section? So they are individual and HUF. The maximum amount of deduction an SSC can claim is rupees 1,50,000. This is the cap in this section. Then there is a long list of eligible investments that we can invest in and claim deduction thereon. The first one is premium on life insurance policy. Means whenever we pay premium on life insurance policy, we will be eligible to claim deduction on such amount. But how much deduction we'll obtain will depend upon whether the policy is issued before 1/4/2012 or after 1/4/2012. If it is issued before 1/4/2012, then it will be lower of these two, lower of either the amount we actually paid or 20% of the policy value. But if it has been issued after 1/4/2012, then it will be lower of either the premium paid or 10% of the policy value. Then there is a case where policy is issued after on or after 1/4/2013, but it is for a person with disability, or it is person for a person who is suffering from a specified disease. Then in that case, even though it is issued after 1/4/2012, meaning in this section after 1/4/2013, he will be still able to claim deduction of 15% of up to 15% of policy value. We'll check the amount paid and 15% of policy value, and the lower of amount he will be able to claim deduction. This deduction is available for person paying insurance premium for himself or spouse or children, and in case of HUF it will be for any member if the HUF is paying life insurance premium of any member. Then there are many items in this section like deferred annuity contract for self, spouse, children, meaning this is the kind of contract where we have to invest a certain premium for a given number of years, and after that they will start paying us our returns for an return annually for a long period of time. Similar is the case of PPF, we can claim for that as well. Then there is employees' contribution to statutory provident fund, recognized provident for an approved superannuation fund. It's like that where in PGBP section 29 we studied that the business is able to claim deduction on the employer's contribution to such funds. Also the employee will also be able to claim deduction on such contributions. Then there is amount invested in NSC, or as well as interest accrued on NSC. Then there is repayment of loan of this is the repayment of housing loan. It has two conditions. Firstly, it should have been taken from either bank or financial institution or employer. This extra does not mean every person, like friends, family does not include here. It means extra like NBFCs are also included. And then it should be used for the construction of house. The loan should be either for the purchase or construction for our house. The cases of repair reconstruction are not covered here, and the deduction will also only be available if it is repayment of loan happens after the completion of construction. Here is an example. Housing loan. If we repay the principal amount, we'll get a deduction under section 123, and then it will be only for housing loan taken for purchase or construction of house, and it should have been taken from like banks, PFI, employer, NBFC, such people only. We earlier studied in the house property chapter that they used to get deduction under section 22(1)(b) for either purchase, construction, also repair and renovation, and they can take loan from anybody. They used to get deduction under section 22(1)(b). But this deduction is for interest amount, this deduction is for principal amount. Moving on, there is fixed deposit in scheduled bank, post office for 5 years or more, and then there is tuition fees paid for education of children, maximum two children for full-time education, not part-time education. This has to be remembered. And then there is deposit in bonds of NABARD, public deposit scheme of HUDCO, senior citizen savings scheme. These schemes, contribution towards ULIP, notified mutual funds UTI, pension scheme of UTI, Sukanya Samruddhi scheme. And in this Sukanya Samruddhi scheme, when a person receives interest on such deposits, that interest is also exempt. Then there is this important point of stamp duty and registration fee. We get a deduction for the stamp duty or registration fee we pay at the time of acquiring of some house property. And when we take deduction of such amount, we are not allowed to add it to the cost of the asset. And by employee of CG, these are all examples: National Housing Bank, pension, annuity plan. I can only remember this if I keep practicing many questions, and that's the only way to remember these. Moving on to an important one, which is NPS, National Pension Scheme. It says when a contribution is made to the National Pension Scheme, in case of salaried employee, he will get a deduction of lower of these two, either employee's contribution or 10% of salary. But in NPS is open to other people as well, means not only salaried employee can have the benefit of national pension scheme, also other people can have, like somebody is self-employed and he decides to make a national pension scheme account, so he can take the benefit of the scheme as well. So for him, the deduction will be lower of either the SSC's contribution, the amount of money he puts into the scheme, or 20% of his gross total income during that tax year. An example to explain the same is here. This is Mr. BBVPL is a company, and Mr. Vishal Pandey is an employee of such company. He is making he is making a contribution to NPS of rupees 1,80,000 rupees, and his salary is rupees 12 lakh rupees. Salary for the purpose of this section means basic plus DA, which forms part of the retirement benefits. So, assuming it is 12 lakh basic plus DA forming part, then we can calculate the amount of deduction he will get under section 123 as follows. He'll get lower of either his contribution, which is 1,80,000 rupees, or 10% of his salary, which is 1,20,000 rupees. So deduction under section 123 for Mr. Vishal Pandey will be only rupees 1,20,000 rupees. And then there is also a related provision in PGBP chapter about this, where BBVPL was making a contribution in national pension scheme of 1,80,000. He also, the business also gets a deduction under section 29. It was lower of contribution or 14% of salary, like this 180 or 168,000. So they will get a deduction of rupees 168,000. Then once the deduction has been taken, we see that the amount of employer's contribution, this is added to the income of Mr. Vishal Pandey for the purpose of calculating his taxable income. So since it is added to his income, he should also get deduction for the employer's contribution as well. He gets that deduction in section 124(1). It says the deduction will be lower of employer's contribution, which is 1,80,000. It can be different as well. For this example, it was the same amount, or 10% of salary, which is 1,20,000. So he'll get a further deduction of rupees 1,20,000. So what is Mr. Vishal Pandey getting? He's getting deduction under 123 of 120,000 rupees, and then he's also getting a deduction of 120,000 rupees under section 124 subsection 1. Now, for calculating this amount of deduction, this 10% will become 14% in two cases. Firstly, if the employer's contribution is made by central government or state government, means Mr. Vishal Pandey is a government employee, so the employer's contribution is being made by the government itself. In that case, the deduction for while calculating deduction will use 14% here. Also, there is section 124 subsection 2, which says that if SSC chooses the new tax regime, he will also be able to use 14% here instead of 10% of salary for calculating this deduction. Something to be noted here is if Vishal chooses old scheme, he will get a deduction under both section 123 and 124 subsection 1, but it will be calculated using 10% while calculation. But if he chooses the new scheme, he will not be eligible for deduction under section 123 because section 2021, which is the section of new scheme, says that he can only claim deduction for subsection section 124(1) and section 124 subsection 2, which is this section about the employer's contribution and following of new regime. So he will get deduction under section 124(1), but here he will be able to calculate the deduction using 14% of salary, and there will not be any limit of 1,50,000 in section 124. There is never a limit of rupees 1,50,000 in section 124 1. Moving on to section 124 subsection 3. This is an additional benefit given to the employee. It says that when we have, like in the above example, Mr. Vishal Pandey had made a contribution of rupees 1,80,000 rupees, but he was only able to claim rupees 1,20,000 rupees. So 60,000 rupees he was not able to claim deduction for that amount. So this section 124.3 allows him a further deduction for that amount, a maximum of rupees 50,000 rupees. So I have taken the above example here again. Out of 1,80,000 contribution made by him, he was only able to claim rupees 1,20,000 as deduction. But this section allows him a further deduction of rupees 50,000 rupees on the same, a maximum of 50,000 rupees. Because he was losing 60,000 rupees earlier, this is kind of a relief provided to him. Now, about calculating such amount of deduction under these sections, we can either calculate deduction under section 124 3 first and then calculate deduction under 123, or we can calculate it the other way around. But it is always beneficial to calculate it first 24 subsection 3 and then under 123, because section 123 has a long list of deductions, so we don't want to use up our limit of 1,50,000 in that section on this deduction only. We would always like to use it on other deductions as well. So we would first exhaust the limit of 50,000 available in section 124 subsection 3, and then we'll use the remaining amount in section 123 we'll use the section 123 to claim deduction on the remaining amount of contribution. This is an example of the same. I have taken the example of self-employed here, who is making a contribution to NPS rupees 1,50,000 and his gross total income is 6 lakh rupees. So as per section 123, he will get a deduction of rupees 1,20,000. So out of 1,50,000 that he contributed, he will only get deduction of 1,20,000. So he's allowed a further deduction of 30,000 under section 124(3). But if we go the other way around, which is the more beneficial way, we will first utilize full rupees 50,000 under section 124 subsection 3, and then we'll move on to section 123 to see how much we need to utilize from that. So the contribution remaining is, out of 1,50,000 we utilized 50,000 here, so remaining amount is rupees 1 lakh, and 20% of GTI is 1,20,000. Lower of these two is 1 lakh, so we'll only utilize 1 lakh out of the limit of rupees 1,50,000 under section 123. This way we have 50,000 rupees still left in section 123 that we can utilize against other deductions, other investments. But in here we only had rupees 30,000 left in section 123. This is all that's said in this. Moving on, continuing with section 124, there are further few points that need to be checked. Firstly, there is this note about deduction under section 124 subsection 3. It says that we can also contribute such amount in minors NPS Vatsala account, and there will be a maximum limit of 50,000 on the same. This is a further deduction that will be allowed to the parent or guardian. And then there is section 124 subsection 6 read with schedule 2. It says any payment received by assessee or minor on closure of his account. See, when a person has an NPS account and he decides to close it, the amount he receives on the closure of it, out of this we will see 40% is taxable and 60% is exempt. Then there is this pension received from annuity plan, it's fully taxable. Subsection 7 and 8 of this section say that in case of a death of a person who owns such NPS account, any amount received by his nominee or legal hire or parent or guardian will be fully exempt. Then these are general notes that salary means basic plus DA, which forms part of benefit. Then there is in case of partial withdrawal from NPS means we do not draw out the entire amount in NPS. We draw out only a certain percentage of amount in NPS. So in that case, the amount of payment we received shall be exempt up to 25% of the contributions made. And it will be fully taxable for non-salaried employees. Then there is section 124 subsection 11. It says that any payment received from union pension scheme on superannuation on voluntary retirement shall be taxable in the year of withdrawal. There is a little summary of the same. It says that NPS, when an NPS account is closed, when it is because of death, it is fully exempt. But when it is closed voluntarily, like otherwise, then 40% becomes taxable and 60% becomes exempt. Then there is the case of partial withdrawal. In case of partial withdrawal by an employee, or in case of partial withdrawal by a parent for a NPS Vatsala scheme, then there up to 25% of the contribution will be exempt. 25% of contributions made would be exempt. And in case any other person who is not a salaried person decides to partially withdraw some amount for NPS, it will be fully taxable in his hands. Moving on to the next section, which is section 125, a simple section. It is regarding those Agniveers, that army scheme where they have to serve the army for a limited period of time. It is regarding that only. It says that there is a fund, Agnipath Corpus Fund. When the employer, which is central government, makes a contribution to that fund, or the employee, which is the Agniveer, if he makes the contribution to the Agnipath Corpus Fund, this contribution will be allowed as deduction. 100% deduction for him means for the amount he deposits himself, he will be allowed deduction under section 125 fund, which will be 100% of his contribution. Like here he is contributing 1,20,000, so he will get full deduction for that. And in case the employer is depositing some amount, that amount will first become taxable in the hands of employee, means the Agniveer, and then he will get a deduction under section 125 2, which will be 100% of such amount. And further, any amount they will receive from the Agnipath fund will be exempt. Same is written here. Moving on to the next section, which is regarding the payment of medical insurance premium, or payment in central government health scheme, or preventive health checkup, or medical treatment, all these things. This is a little long section, but it is kind of interesting. Firstly, the eligible assessees are individuals and HUF. For individuals, they can make payment for their self or their spouse or their parents and their children in case the children are dependent on them. And for HUF, and HUF can make payment for any of the members of such HUF. This payment should be made in any mode other than cash mode. Means any check will work, any banking mode would work, but not cash. Cash will only be allowed in case of preventive health checkup. And because people will like to exploit this exemption, there is a cap of rupees 5,000 rupees on preventive health checkup, which I'll come to in a bit. So, how much deduction will they get? In- these are all the cases of calculating how much deduction they will get, starting with an individual when he is making payment for himself or his spouse or his dependent children. Then we'll see if he's making payment of medical insurance premium, central government health scheme, or preventive health checkup. He will be allowed a deduction of maximum of rupees 25,000 rupees. This is the deduction he will get. Then we'll see he will he will get an additional deduction of 25,000 rupees. Means this limit will become 50,000 if he makes an expenditure of mediclaim for senior citizen. Means if he himself is a senior citizen and he is paying for mediclaim of himself, or his spouse is senior citizen, or children, whatever, if anyone is senior citizen and he is paying for them, then he will get a further deduction of rupees 25,000 rupees. So there is this is part A for him. And then he's incurring some medical expenses of senior citizen, whether it is himself, his spouse, his children, whatever. He is incurring some medical expenses for a senior citizen, but that senior citizen does not have a health insurance. Means the mediclaim premium is not paid for such person. Means he does not have any health insurance. Then he will get a deduction of up to rupees 50,000 for that medical expenditure. This will be part B. So we'll calculate the deduction under part A, and then we'll calculate deduction under part B. But there is a cap of rupees 50,000 on part A and part B combined. Means if we are eligible for 50,000 deduction here and 50,000 here, but we will be allowed a total of only 50,000 deduction here for self, spouse, dependent children. Then is the case of parents. In case he is paying for medical insurance premium, CG health scheme is not covered here, and in case he is making payment for preventive health checkup, then the limit would be 25,000 rupees. But in case his parents are senior citizens and he is making payment for mediclaim, then he will get an additional deduction of rupees 25,000 rupees. So under part A, again he will get 50,000, up to 50,000 of deduction. Then same for parents. If his parents are senior citizens and they don't have a health insurance and he incurs some medical expenditure on them, then he will again get a maximum of rupees 50,000 deduction on it. So and then a combined deduction of part A and part B will be 50,000 only. Means he'll first calculate under part A how much he is eligible for, and then he'll calculate under part B. An individual limit of 25,000 applies in part A, and then a limit of 50,000 applies in part B, and then the overall limit for both parts of rupees 50,000 applies. Means an individual. So what an individual can do when he is incurring expenses for either himself, his spouse, children, he will get a maximum of 50,000 deduction. And when he is incurring expense for his parents, he'll get a maximum of 50,000 deduction. So he can, in combination of these two, he can get a maximum deduction of 1 lakh. This is for individuals. For HUF, they can make payment of medical insurance premium of their members. Other expenses like CG health scheme is not allowed. Preventive health checkup is not allowed. These things are not allowed for HUF. So the limit again will be 25,000, and in case the member is a senior citizen and it is the payment of his mediclaim, again additional 25,000 will be allowed. And then again, if there is some medical expense of senior citizen member and he does not have a health insurance, there will be a limit of 50,000 on it in part B, and then the combined limit for HUF would be 50,000 rupees. So HUF can get a maximum deduction of rupees 50,000 under section 126. Then there is a case of preventive health checkup. As I saw earlier, that it was allowed to be paid in cash, but there was a limit of rupees 5,000 which will be allowed per annum. Means like this individual is incurring preventive health checkup expenses here or here, but he will get a total deduction of rupees 5,000 which is included in these limits, 50,000 and 50,000. Means the maximum deduction he can get is only 1 lakh rupees, and in that 1 lakh rupees he has to include the preventive health checkup as well. Then we have the K. Okay, we'll do this in a bit. Lump sum payment first. I have some examples which will help understand this concept better. So there is Mr. BB. He spends on health insurance premium on his own health insurance premium, or Mrs. BB or his dependent children. An amount of rupees 22,000 is spent by him on health insurance premium. So there was a cap of rupees 25,000 on it. So this is within the limit. So he will get a reduction of 22,000 of this. Then about his parents, who are both senior citizens, he is spending on health insurance premium rupees 40,000 on his mom. As I saw there, the limit was 25,000 only. But in case the parent was a senior citizen, then there was a further deduction allowed of rupees 25,000. So the limit becomes 50,000, and he is spending rupees 40,000 here. So the limit, it is within the limit of 50,000 rupees. He will be allowed for the full 40,000 rupees. And then he is incurring 35,000 for dad's medical expense, means he is going into part B. He is incurring some expense here for his dad who does not have a health insurance. He's incurring 35,000. So under part B, the limit was 50,000. It is within the limit of part B as well. But if we see the combined amount of these, it comes to rupees 75,000. But the combined limit was only 50,000. So he will get a deduction of only 50,000 rupees for parents. And for himself, his spouse, and his dependent children, he will get 22,000. So in total, he is getting 72,000 rupees of deduction under section 126. Moving on to the next example. It is where he has made an expenditure of medical insurance premium for himself, his spouse, or kids rupees 22,000. For his parents, who are both senior, 32,000, and he has spent rupees 7,000 and 8,000 for preventive health checkup. We know preventive health checkup has a limit of 5,000 in all, so that's why this example becomes interesting. So in case of medical insurance and preventive health checkup, like I saw here, medical insurance and preventive health checkup, the limit is 25,000. He's spending 22 plus 7,000, which is uh, 29,000 rupees. He's spending 29,000 rupees here, but the limit is only 25,000. So he will get a deduction for this of rupees 22,000, and for this he will only get a deduction of rupees 3,000, because the limit is 25,000. So maximum deduction for himself, his spouse, and his dependent kids is rupees 25,000, out of which 22 was for medical insurance and 3 was for preventive health checkup. Then we move on to the medical insurance of his parents, who are both senior. So in that case, here the limit was 50,000 rupees. He is spending 40,000 rupees on the same. So it is within the limit, but he will not be able to claim the whole deduction. He will be able to get full deduction of rupees 32,000 rupees, because it is within the limit of 50,000. But out of this 8,000, he will only be able to claim rupees 2,000, because for preventive health checkup, a combined expenditure of 5k is allowed. 5,000 is allowed, out of which he utilized 3,000 here. So here he will be only able to utilize the remaining amount, which is 2,000 rupees. So out of these two, he will be able to claim deduction of full 32,000 here, and then only 2,000 here. So total deduction will be 34,000. Therefore the total deduction under section 126 will be 59,000 rupees only. Then comes the case of lump sum payment. Let's start with this example. It says here Mr. BB has an health insurance policy. The period of the policy is 1 year, and he has taken it on 10 December 2026 and made the payment of premium here. So he will be allowed deduction for it. Then there is a special case where the period of health insurance policy is 3 years. He's starting to make the payment of the policy starts on 10th December 2026, and after 3 years it will end, means it will end on 9th of December 2029. And during that he has to make the payment of premium, but he made the lump sum payment of period of premium of rupees 82,000 here. So how much deduction will he get? He will get deduction spread over the years of the policy, but it will not be simply just 3 years. We'll have to see all the tax years which are getting involved in this policy. Means the policy starts on 10th of December 2026, means tax year 26-27 is getting involved. And then policy ends on 9th of December 2029, so tax year 29-30 is also getting involved. So he will have to distribute it over a period of 4 years between tax year 26-27 and tax year 29-30. So 82,000 divided by 4 gives 20,500. So you'll be able to claim a deduction of 20,500 for each of the 4 years. Moving on to section 154. This is a deduction available for handicapped people. If there is a handicapped assessee, he should be resident individual. He will get a flat deduction of rupees 75,000 in case of normal disability, which means disability of 40,000, 40% to 80%. And in case of severe disability means more than 80%, he will get rupees 1,25,000 deduction. This is a flat deduction, means it does not depend on the expenditure he incurs. Even if he incurs only 10 rupees, he will get full deduction of 75 or 125,000. Then is the case of medical treatment and maintenance of handicapped dependent relative. In this case, the SSC should be resident individual or HUF, and they will also get a flat deduction of 75% or 75,000 or 1,25,000 in case of severe disabilities. Even if they incur 10 rupees expense, they will get a full deduction. So they should incur expense on medical treatment to be eligible, or they should deposit any amount for maintenance of such handicapped relative. Now, who are these handicapped dependent relative? Firstly, they should be handicapped, they should be dependent, and they should be relative. For the purpose of this section, relative definition means for an individual, his spouse, brother, sister, children, mother, and father. Grandfathers are not included. Only these people will be included. And for HUF, it will be any dependent member of HUF. If they incur expense on these people, they will be allowed deduction. And deduction will be reversed in case the handicapped received annuity before the death of SSC or before attaining the age of 60 years of SSC. Means if an SSC dies, then obviously handicapped person needs to manage his expenses, then maybe he will receive annuity, and in that case they don't need to reverse the deduction. But if a handicapped is receiving annuity before the death of the SSE, means the person who was helping them, then there is a question that the person is not really helping them, or they don't really need help of the SSE, then the deduction is reversed. Similarly, when the SSE becomes more than 60 years old, it is hard for him to manage himself. How will he manage the dependent? So in that case he is allowed deduction. But if before attaining the age of 60, in that case the handicapped would utilize annuity to help himself, and it will be justified. But in case the SSC is younger than 60 years and the handicapped is receiving annuity, that means that the handicapped does not really need the SSC, so the deduction of SSC will be reversed. In case of death of dependent handicapped, it will not be reversed. The In case of death of handicapped relative before SSC, amount deposited for maintenance shall be deemed as income. The amount that they had deposited for maintenance, it will be deemed as the income of the SSC because it no longer matters for them. The handicapped person is already dead, so it doesn't really matter. Now, something to note here is we cannot claim both deduction. Means we cannot do that. The handicapped is claiming deduction under section 154, and we are claiming under section 127, because if handicapped person is earning income, he will just use his income and claim deduction under section 154. But if he's not earning any income, then he will be dependent on the SSC, and then the SSC will incur expenses on him and therefore claim deduction under section 127. Moving on to the next section, which is section 128. This is the deduction in respect of treatment of specified disease. This is that section 80 DDB wali deductions, that danger बीमारियां और दिल दहला देने वाली बीमारियां like cancer, HIV, and all those dangerous diseases. It says the eligible SSC will be the resident individual or an resident individual or resident HUF will be eligible SSC. They will get a deduction when they incur some expenditure on the treatment of specified disease of whom either their self or their dependent relative. Means if these people are dependent on them and he incurs expenditure on them, then only he will get deduction for the same, or in case he incurs it for himself. Then in case of HUF, if they incur expense for any dependent member of HUF. Now for the amount of deduction, we'll have to see the actual expenses they incur on treatment, and then there will be a limit of 40,000 on it. in case of normal case. And in case the person is the patient who is suffering from such disease is a senior citizen, the limit will be rupees 1 lakh. So let's assume a normal case where a person is not a senior citizen, and the actual expenditure incurred is, let's say, 50,000 rupees, and then the limit is will be 40,000 for him. So whichever is lower means 40,000 of deduction. And then we'll see if he received any insurance claim, means if he had an insurance uh, on his condition and he received some insurance claim, that amount will be deducted. Let's assume he received 20,000, so that will be reduced. So in short, he will get a deduction of rupees 20,000 only. Moving on to the last section for today, which will be section 129. This is the case of interest on loan for higher education. Means when a person takes an education loan for higher education. Higher education means any course after 12th class. Eligible assessee will be individual, any individual. Then the deduction will be the interest amount he pays for a period of 8 consecutive years, starting from the year assessee starts paying interest. Means when an assessee obtains education loan and he starts making payment of the interest, starting from the year when he starts making payment of interest, he will get a deduction of the amount of interest for 8 years. The section is trying to say you will get a deduction for interest for 8 years, because it's obviously an education loan, and maybe after 8 years you have figured things out and you don't need a deduction after that. So deduction will be allowed if the loan for education is taken either for self or spouse or children, or any student for whom you are a guardian. That is all.